All right, we are going to kick off today's session of Forward Focus. So the market's been, pretty much not doing a whole lot this week. We've seen things kind of chopping around a lot more, again, to be expected based upon what we talked about last week. If you have anything you want to take a look at today, please post that here in the questions box. For those in League of Traders, next week we are doing core concepts in League of Traders. So we are going to be going through everything from how to use Fibonacci fans to all of the core setups, and I'm basically going to do a run through on templates and give you examples of all of the strategies and all of that fun stuff. If you're not in League of Traders, go get a trial and then you can at least join us for that week. Go to tonihansen.com/community and you can get a trial. Or if you want to join us for 3 months, you can go to tonihansen.com/150 and you can get 3 months for $150. So you can join us for next week, and we are going to go through all of our core concepts. So let me post our Nasdaq chart here. I'm going to pull that up. We are in the middle of like a massive avalanche attempt right now on the intraday charts. But let me show you. Here's well, I guess it's not really. What time frame was I looking at? Well, we've got a 500 tick with the 2 waves up, so you've got a little baby 2T there. Must have been like a 240 that I was looking at. So here's what we've got going on the 60-minute. Basically, it's just trying to play in here, but it's really messy. So last week we were coming into a lot of resistance as we were heading into the weekend. We were seeing basically a 2-wave move up on the daily time frame here. 1 and 2, and that had a 2-wave move in it. So that brought in exhaustion as we went into last weekend. So we really have just been seeing the reaction playing out, how we've just been correcting to that exhaustion. Let me put the Fibonacci retracement levels on here. Right, almost at the 76.4, but not quite, just pretty close to being there. So this is likely to continue to play out as corrective mode as we go over the next couple of weeks. Given the strength of this second move up here, we do have room that this could go into, correction similar to this, and then try to do like a third move that could kind of shift that. That's a possibility that we saw. Since this has been a lot stronger than I was originally anticipating, what we do have is still potential to go up to that high. What we don't have, though, is any easy shot of breaking that high. So even in the examples we looked at over the last couple of weeks, where we do get the market managing to return back to those prior highs, that serves as a really strong resistance zone. Best case scenario, you get like a 123.6. So it'll go like to the negative 23.6% level up here. But that's not going to be most common, especially since our second wave here is still in this midway zone. You can see it's kind of squashed here between the 23.6 and the 76.4. So it's incredibly difficult to manage to break those previous highs and probably not even do a full test of those previous highs, even on a third leg attempt. It usually falls short. Basically, this channel break over here is the next resistance zone. So what I was originally looking for in the market is that, with the reaction off of here, we would see potential to go and do a 2-wave move down and do that sort of version of a correction that could then bounce. That's the other way that we will see reactions off this type of a low play out. And there's a lot of securities that still have that particular formation developing. So mostly the things in the Nasdaq have been the strongest because we're so heavily tech laden in the Nasdaq, and that's why we're seeing a lot of extra strength in there compared to the Dow. But overall, in the securities that are doing like the slower reactions, we still have these patterns as potential. So kind of a little bit of a split here in terms of expectations. And when we're coming off of lows like this, basically what we have to do is we've got to watch what's going on those smaller time frames and how the momentum is playing out on the smaller time frames. So what we didn't get was the slower secondary move up here, which would typically bring in another two-wave move back down. We saw that added strength with a lot of things like, you know, Netflix and Amazon and all of those Nasdaq tech stocks holding up really well. Right now, what we're dealing with is basically another correction similar to like what's going on here. So this sort of kind of choppiness can easily continue into next week. We could see even on the daily charts, you know, potential for another wave up in here that could bring in more of a congestion. Typically when we get a third move, what we'll do is we'll get that same time development. So it would try to go here, which would mean that with only one pullback, it's easier for it to serve as a trap. So let's look at this on like a 240. 60 minutes not really big enough. I want to show you 240. Whoops, 240 minute. Let's put the M on there. If you look at a 1500 tick of the ES, it kind of gives you an example. We'll pull that up here in a second. Oh, shoot. Gotta hold on. There we go. I want to change the whole thing. You know what? As that's loading, I'll pull up the ES and show you. So see this over here on the ES, how that had that bigger move there, and it's about the same amount of time here, and then that went like that. That's what we have potential for, like on the Nasdaq on the daily chart. So basically, since there was only one pullback on the Nasdaq, this can go and do like that extra little push to put in the third wave. So here's wave one. You got this double bottom, wave one, correction, bigger wave two, correction, and then it goes to that third high. So notice how close that looks to what we had happening on the Nasdaq on the daily chart. So see here, first, bigger. So, you know, if it does hold like that, about there where that breakdown, that's what we would be looking for. So that's one possibility. On the 240, let me go back to this one. You can see that things are kind of iffy in here. It's not really trying to do a good Phoenix yet to kind of bring in that third move. And that third move could then go to the 1, 2, 3, which would bring it to, you know, slightly higher highs. But it was more of a pullback here, so we don't have that little Phoenix in here yet. But yet it also pulled up too high to really give us a good avalanche for a second move down yet. So really it is at a zone of pain where it can kind of do either thing, and we've got to watch the smaller time frames. I'm kind of leaning for the upside here, but we would need that smaller shift, something to bring that up there. So it's tricky here, you guys, right now. So use a lot more caution. It's mostly scalp mode. We're not really at anywhere for swing trade setups here as we go into the weekend, which is not surprising because who wants to hold a swing trade over the weekend right now with the way things are? Doesn't the ES 240 look like it could be doing a momentum reversal plus? Let's go back to that one. I don't have the 240 up on here, but yeah, the 60-minute looks like that. So here you got your 1, 2, 3 for the momentum reversal that we were talking about earlier this week. And then if this can manage, that could go to a momentum reversal plus. But again, we kind of have that extra risk on the daily. Is it going to try to do that third wave on the daily? So when we get up to here, we're going to be at that do or die point. So you'd have to see an immediate reaction off of that zone. So this would be something that I would try out and build a position if it ends up holding. But at the same time, if it starts to kind of go into like a range here, then the risk would be that it could go and continue just like what I was just talking about on the Nasdaq. So it's a lot more iffy right now. Let's go take a look at some of the individual stuff and other things that you guys want to look at. So we've got NVIDIA, Square, Intel. We haven't looked at SQ for a while. Let's go pull that up. So I'm going to get that one to load, and I've got mRNA. I know some of you are following this one. So we'll take a look at that one. So this one, we were just dealing with this exhaustion up here, but this can still push higher. So these are things that sometimes you can get still those extra moves on here. Pull this up on a 240. So you can see it has a two-way pullback on the 240. So even this, it can go into something like that and still manage to push higher. It might go into a 2T, or if it, bases out longer, it could even do a stronger break. I wouldn't go against this though. It's pretty strong here. Add some more data on here. Even the Nasdaq right now on the intraday charts is kind of messy. There's just totally in scalps. I had a short earlier, but I haven't really done anything since. That was at 1140, but I did the ES, not the NQ. That was the avalanche I was talking about. You can see it on a 1500 tick chart. We'll pull that up here in a second. This still isn't enough days. Yeah, it's just so iffy. So see how this bounces here? Comes almost back to this zone, shifts. Now you've got a 2-wave down, and it's kind of bouncing again. Well, this can still manage to shift and turn back around. You could get it going into a base here. You could get it, kind of going into a longer base to come up. This is just so iffy, and it comes down to kind of like that last little shift. And we talked about that on a couple of examples this week in the overall market throughout the week. So this is a really hard zone to trade because you're basically just dealing with scalps that then you're building into them if they're starting to develop and continue in the direction that you were taking a gander at. But I wouldn't put a lot of risk into stuff like this right now. 2-minute, you can kind of see the little momentum reversal, and it's kind of like gaining momentum. So this could easily still keep going up on the intraday charts. So I don't really see anything I would do new other than just day trades right now. Let's see, INTC, I'll get that loaded, and then we'll go look at SQ. And SQ is kind of the same thing. It's going to come down to a final shift in here. So this could go and still manage to turn around, even though it's basing at the high here. If this base goes out like that, that's going to give you a better continuation on the upside. But right now, it's just not there yet. Otherwise, if it pulls back, it could go and kind of shift and turn around. So it's just going to be like the smaller shifts on the intraday charts on the 60 minutes and pretty much everything right now. See how this is a good example of it. So see how we went into a Phoenix, it went into the 1, 2, 3. Well, at this point, this could have gone into like a bigger 1, 2, 3 and gained momentum like that. And what would have happened is we would have gotten a better bounce here, more of a base, and then the continuation. That was a possibility at that point. But what it did was it just did this little two wave and then shifted the momentum here. So it was just the shift in this two wave move that led to that bigger pullback. And that's what we're going to be dealing with basically everything as we head into next week. So it's like everybody is in kind of a holding pattern right now. Let me pull up the daily on this. Yeah, I mean, the daily on this, we could still see that move higher, but it doesn't have to. It could just move higher enough to serve as a trap and then turn back around. The one thing that is good about the strength on SQ is that what it did was it broke down out of this range here with a really strong breakdown, but it managed to make a very strong recovery too. So it's easier to hold on to a recovery like that than if something made a recovery more like this. And then it would have a better chance of falling again. So the fact that this move back up is so strong is pretty good for the bulls. Look at this over here. This gives us another example of what I was talking about on the daily charts on a lot of these strength moves. So you get the strong move, you get the second bigger move, and then see how it does that third move? But that shifts it and then it flips back around. So this is exactly, again, what we could see happening on a lot of the securities that have had a lot of strength over the last couple of weeks, basically throughout the start of April there. So at the moment, that's what I'm going to be focusing more on, are things that are going to be looking like that. So it can creep higher. You'll notice even on this one, let me kind of open this up a little bit wider here. See how that went into the high here? So this move up is kind of like what happened in the Nasdaq, and like right where we're at in the Nasdaq right now is like in this zone here. So what this did was it went and pulled up and basically did kind of three waves up. It had like the initial little check mark and then did a like 1, 2, 3, kind of like what the Nasdaq is doing on a 500 tick right now. And then that flipped and turned it around. But there was a lot of overlap and kind of chop intermingled with the strong intraday trend on a couple of the days. So that's going to be what I'm leaning towards as the most probable outcome for the market right now. What could be a catalyst that could push the market higher? Vaccine trials going through nicely, but I think we're a little premature for that. Some sort of a cure for COVID-19, better treatment options. But I think that's like going to be like kind of a temporary boost. Yeah, people actually going back to work is going to be like the more permanent one, but temporary boosts that could push that up though. Like I think that what we could see here in the short term, like for these little spikes in the market, are just like some little, little news burst. But then when people realize, hey, this is going to take longer and more people are going to get affected, even technology is not going to be probably able to hold things up. Do I think people are going to start flying again in volume? Only if they have to. I think anything that's based on a travel related industry is going to be hit for a long time. Yeah. I mean, people are going to have to start flying for work, but you know what? As more and more people transition to doing stuff via like Zoom and other teleconferences, I think even that is going to start to become more of a norm for a lot of people. So a lot of people that would have normally traveled, they'll get used to doing it this way and could cut back on doing that long term. A lot of companies will find, hey, this is a way cheaper, more efficient option. and they don't have to do the in-person. You're going to do it still for like a lot of big deals, but it's just getting people used to doing more of the teleconference type of stuff. And for a lot of us oldies here, we're still kind of doing that transition. But once you force us on to doing more of that, then we're going to make that move. My son was showing me how to use a lot of this stuff this week. Oh man. He's setting up his play dates on Zoom now, you guys. We've got the Zoom play dates, which are actually a lot less hectic than the regular play dates, so I'm all for that. This is like poor Southwest. You can see that beautiful head and shoulders here well before we had things, going catastrophic. So Southwest was already going to struggle here because it had this rounded off going on. So even if this had managed to pull higher, this was still open for a crash as early as back in here. Yeah, that's about as pretty of an avalanche as you get. Let me see the monthly. You can see where this went past the do or die point. It was here. So basically what had to happen was this would have needed to have gone into another continuation right there with that similar time development, and it didn't. It shifted momentum, so it was already due for a bigger pullback. It's just that what happened drove that even stronger than it necessarily would have, but it was already primed for that potential. I think that's a big thing that's been the problem with airlines here is that they were already struggling before this, and then we had this happen. I'm going to show you guys Boeing here. Boeing, we already know, was getting hammered, but you've got that big, huge megaphone into the avalanche. Feels like we are in a blah zone today. We are. I really don't know that I'm gonna do any trading the rest of the day. I mean, you guys, like what we are seeing on the daily charts, it's just like nobody has any real interest in doing anything in the market right now into the weekend. As you can see, we've been kind of like goofing around a little bit in the Telegram channel today. Everybody has to post their oldie throwback pictures. One of my friends dug up an old photo from high school. And see, we didn't have the advantage of knowing, hey, you don't take pictures of your friends from like a lower angle looking up at them. That is just not flattering ever. This is pretty exhausted here. I would expect a correction on this one. So what we've got going on is a bit of this kind of megaphone look here, and you've got the two-wave move. There's a little bit of room to push a bit more, but then I would expect another correction. So we might get a little bit more again on this going into next week, and then another correction. This is pretty good exhaustion here though. I'd say maybe up to even like 110. We might make it to 110 before it pulls back. So shop has the same thing going on. So this has that first kind of wave, the bigger one here with the two waves. So what this has is it has room to do that third push, but it's going to be stunted. So things like this, people aren't going to want to let go of as fast, but trying to keep that momentum up is going to be tricky. So what we'll usually see is we'll see that midway zone that will have two moves in it, and then after this first start, and then you'll see an extra push, and then a correction, and sometimes that correction can be pretty extreme. Because basically those people get trapped at the top, and then it's kind of chopping at the top, and then they panic. Yeah, as Karen points out, tech companies have been doing teleconferencing for years. So for them, it's like nothing new. They've already adapted. I think a lot of it is going to be more of like engineering firms and architectural firms and those type of places where they've always had more of like a hands-on, like face-to-face meeting for like looking at planning and development and stuff. Those are the people that we're going to start to see do more of the switch to the teleconferencing type of stuff, especially as they get, more used to sharing their plans and stuff like that. We've already been seeing that transition a little bit. It's just going to surge now. So XOP, basically it's coming into this closure zone. We've got the two wave up. So you're at a resistance zone here. It could go and do another move to close the gap a little better. But right now, as we go into the weekend, we're at a good resistance on this one. So I would expect a pullback here as we head into the weekend. Let me show this to you guys intraday. So you can see the two waves more clearly here. And this is kind of where we're seeing a lot of the intraday stuff right now. So the overall market right now looks like this. It's a mass. And then this couldn't confirm on that breakdown. So what it did was it was changing momentum here, trying to break down, but it couldn't break the previous low. So then that meant that this overall momentum was the guide, and then that broke. So we're in this type of zone in the market right now, intraday today. We're in a day like this, except that it's on like a daily time frame. Well, the intraday is looking a lot like that too, actually. So we had like the shorts this morning, and then it's kind of just playing around now. So this has the 2T here. So this is why we're looking at like a little bit more of an intraday. You can see the measured moved zone. It probably went to about 123.6. Let me put that on here. Not quite 123.6 from the last low, but 123.6 from the whole triangle. So I would expect more correction on this as we continue into the weekend, but probably not a big sell-off or anything. It's just going to go blah. So it already has the 1, 2, 3, three waves down. So this should probably shift, but kind of just hold this range as we go into early next week. Yeah, I'm afraid I'm not going to have a lot of like excitement for, hey, this is a beautiful looking swing trade. No, that's just, the market's just not giving those right now today or this week. Like, see here on Intel. And so on Intel, this has the nice two-wave move up, but then it had a little bit of a trap here. So this is meaning that even though we're seeing the strength today, that could shift again and bring in another move. But if it's strong enough, it could be and give us another continuation. So we've got a lot of either ors going on as we head into next week. And it's all going to come down to what happens in the shifting momentum at the beginning part of the week. So everything is looking like that right now, at least in terms of the overall market. Everything that trades even remotely with the overall market is looking like that. The pound even has a number of possibilities. So this has two waves down here. Could do another third. That could open it up as like a megaphone. That could bring it back up into that zone. But there's nothing to give us any confirmation for directional bias on this on the daily time frame. Let's look at the weekly. I know a lot of the Forex markets on the weekly are kind of too. So see, this is in a big megaphone on the weekly. And it was trying to do it as a mega lanch. See monthly. And then here's what we had going on the monthly. Remember, we had the really strong move. And so then it did the slower move. So when you have a really extreme drop, so this was basically what we were looking at as a potential to have happened on the overall market when this was down in here and trying to react. So that this was one of the ways that the overall market could have played off after that extreme drop. But instead it held, it had that extra strength. So basically at this zone, this can keep shifting. It can do extra shifting and then bring a pop. But right now, it's more at a back and forth zone. So there's not a lot of strong bias right now here on this one. Let's see if there's any other Forex pairs that are going to be giving us any sort of stronger setup. We can go look at some of like the totally off market things that we don't usually look at too, like maybe wheat and such. Gold, let me pull up some charts on gold for you guys. I've been trading gold mostly this week. As far as commodities go, gold's been my big one this week. Grab that. Remove some of my bibs and stuff I've got all over on here. Kind of making it a mess. Dollar yen. Weekly. No, there's no main bias on this on the weekly. It's going to all come down to the smaller daily. Daily is a bit more on the bearish side, but when things get into a really tight wedge like this, it's trickier because they can give false moves one way and then break the other way. So you've got like a little baby avalanche, but it can go break like that and then pop back up. Same thing here. This could break up and then pop back down easily. So this is a really, whenever you have like a really tight wedge like this, things are more prone to fake breaks either way. So it's a high risk. Basically, if you wait for the break and then play the next move, your risk is going to be lower on whatever trade you're taking. I think one of the big things about trading that people have to learn is that sometimes you just have to sit and wait. You don't always have to be in a setup or in a trade. I think swing traders learn that faster than day traders, because swing traders learn that, hey, there's only a couple of days out of a couple of weeks in a security where you have the strongest setups. The rest of the time you might be position building, but then you're going to have to back off and wait for a while. So I think swing traders learn that a lot faster than just day traders do. So here's gold. So as you guys know, I've been bullish on gold for a while, well since last year, longer term. And what we're seeing is the strength is building here. So this is still pretty good. A lot of times when something starts slowly like this can go to higher highs more easily. So we saw a little bit of kind of a reaction here. People with a lot of margin calls, banks and stuff were kind of liquidating, but overall, still good. And this is still something that's holding up pretty well. This is a daily time frame, so this can still go and do another push up here on the daily, kind of shifting. Let's see. I'm gonna pull up an intraday on the 240 for you guys. For day trades over the last 2 weeks, I've been short because it had a beautiful megaphone that we were talking about the other day, this week in League of Traders, at a 76.4% retracement. So intraday, we've had the short play. Oh, come on, open. There we go. So this went right into 76.4% resistance, and then there was a megaphone on the time frame charts, and that's what's leading to this correction in here, just on intraday. But it held up pretty well. I mean, overall, it had a pretty good move up. So this could base out and go up again. Again, we're going to have to see how that momentum shifts in here. Longer term, I'm still perfectly fine with a long-term hold on this. Let me show you guys that megaphone. Kind of scroll all the way back to where we had it. Here it is. So here's where we were coming into the 76.4%, and you can kind of see that megaphone up there. And that's where I shorted originally. And that's what's at that resistance on the, go back to the intraday. That's where we're at right there with that 1760. So you can see we're right at the start of this going into a bit of a correction here. And this could continue into in correction mode as we go into next week. So kind of chopping around back and forth. I know it's kind of a boring day for those that were wanting to like have a lot of excitement here. Today's forward focus is, I'm not going to do anything with it. I'm not going to do anything with it. So here's a good example when we're talking about how like that range gets really tight and it can give a false break. That's a good example of what we're looking at. And then it can pull back up, that can shift and pop back up, can create a longer range that can then go and break down more easily. If it tries to break earlier, it usually will chop more. So you'll basically get, a lot more back and forth action on this. The best thing for like the bearish side would be for this to go into a bigger range and then drop. But if you're bullish, what I would want to see is more chopping and then a channel break. And that can bring in pops that are like this, where you get kind of like those relief rallies. What's a megaphone? So a megaphone is like this, when you get a widening up happening. So think of it like here's our little person. Oops, our mouth is a little high there. Here's our nose. I was an artist in a former life, can't you tell? He has really cool hair. And there's our megaphone. I was not a digital artist. Yeah. Um, it seems new valuations are being born out of this earnings cycle, but with the Fed's pumping liquidity, it's hard to determine where each of these companies' sectors will end up. I think that's true, Richard. I think that's very true. And it's kind of, we don't really know where this administration is going to put all of their money. Yeah. A lot of people. So now that we've got like what happens a lot of times with news type of events is you have the original reactions, overreactions, back and forth, and then people are like, I don't really know what's going to happen next. And that's kind of where we are right now. We're in a waiting period. Beyond Meat. See, that's one that could just have nothing to do with what's going on in the overall market. I haven't looked at that one for a while here. Yeah. Hmm. So here's a beautiful avalanche. Your 2T. So we've got that widening. So this can go and do another push here. This could go into a megaphone actually on the daily chart here. So this would be a good example of one with a potential for a megaphone because you've got this stronger middle way zone in here. So if that has another push or can go into maybe like a bigger correction and another two-way push, since it's would be kind of like midway, that could go and form a megaphone here on the daily chart. That's what it would look like. So what you end up with is you've got like higher highs and the lows. Actually, I can go show you some examples. That one on gold is a great example because what you've got is you've got your first high, 2, 3, 4, 5, and then so basically what you're doing is you're looking for a short off of 5 when you're looking for reversal patterns. But this distance here to here, you want it to be wider. So when it hit this high here, even though we had a momentum reversal, the distance between 2 and 4 was still a little bit bigger than 3 to 5. So it took that extra little kind of push there to bring in the pullback. And 4 is your buy. So when you're looking at a megaphone, you get to 0.4, you're looking for buy patterns. When you get to 0.5, you're looking for short patterns. And then of course, where your megaphone is taking place in a bigger trend determines if it's going to lead to a really strong move or not. Richard. A German Shepherd is looking out the window of his house and sees all the humans with their face muzzles, and he's thinking, did they all bite someone? I saw that joke the other day too. That's hilarious. I love German Shepherds. It's my favorite dog. WYNN. This is going to be one that, again, we aren't going to have much of a really strong bias until we see how things open up. So right now, you can see a lot of people are concerned about this. It's reacting less than the overall market. This is something that could very easily come back down again. Even if it tries to push up more, it can come back down again. You'll have tons of resistance over here. Remember how at the very beginning of when I started talking, I said, hey, if it pushes up really fast, it's easier to hold on to that. But if it goes up slower, it's easier to fall more quickly. This is a good example of something that can fall more quickly again. So even if that pushes up again, the overall move is going to make it easier to do that. So what ones have we not pulled up here? I'm going to scroll back. NVIDIA. Didn't pull up NVIDIA yet. Yeah, Richard, my parents actually had a dog that was half wolf, half German Shepherd. The way the story went was that the German Shepherd dad jumped the fence and visited Lady Wolf next door. Whoops. They can jump quite high. So NVIDIA is one that could easily go for a higher high because you've kind of got this two wave here in the middle. So it tries to do a 2T, but there was no two wave move up into that. So that means that this could just be like a tilted correction and go and do another push. So I would not bet against NVIDIA yet. Tesla. I had a Tesla chart open and then I think I switched it. Tesla's the same thing. It has that midway strong move, so it has room to do that third move. So a lot of these, you can just see the theme here. You've got the smaller, huge, and then the potential for that third one. So that's what a lot of these are doing. Do we always get that third one? No. And the degree that that third one can go, usually it's pretty close to what this first move is. That's generally the close, what you'll see as the closest approximation for how far it can go. He had a good motivation for jumping the fence. I think he did. It was a beautiful dog. So here's one. So you get the move here. It's kind of going and gaining momentum. This also has a chance to push through the previous highs there. So CMG also, I wouldn't bet against. I think that you're going to get further upside on that one. Could easily go into 1,000. That would be, I think, the magnet that it's going for. So yeah, you can see the both ends of the spectrum. You've got Wynn Resorts on the opposite end, where it's gonna, even if it tries to go higher, that's gonna be, really bad. And then you've got these that have the stronger move that can still keep pushing more easily. So NVIDIA, CMG, Tesla, Kramer's target on CMG is 1,000. See? Yep, I think he's spot on that one actually. All right, you guys have anything else you want me to look at? When we just did, if you missed it, it'll be about 10 minutes ago if you want to go and back and do the replay. But basically, Wynn is going to probably be pulling down. Can I still trade oil on Ninjatrader? Yeah, but I've been, I think they put a lot of restrictions on it. I haven't the last couple days because I was trying to do stuff and it wasn't letting me. I haven't looked into the reasons, but they've obviously instituted a lot of halts on it. TOS is doing the same. Has anyone been trying to trade oil the last couple of days and just is not letting the trades get off? I haven't read like news reports or anything. Like Richard says, you can't short USO. I was actually trying to buy oil and it still wouldn't let me. That just led me to go and trade gold instead because I had been trading mostly oil for the last couple of weeks. Apple's not as good. It's kind of like midway. I think that Apple will have an easier time doing another correction. So it can also still pull up a third wave with the rest of the market. But this zone here is going to be good resistance. So it's going to have a hard time pushing through 300, I think. Karen says USL is another option because the contracts in that go out 12 months. That's correct, Harvey. Yeah, I didn't do the series 7. I did the series 3. All right, you guys. Well, we'll wrap this up here then, and we're just going to kind of play it by ear next week. I think mostly I'll probably be in day trade mode with a bit of a bullish bias. See how many of those things can be pulling up. But like we saw a lot of those third waves up, there's still a lot of overlap from one day to the next. So it's going to be a little bit trickier. Yeah, US, the majority of the contracts are the front months. Very good point, Richard. I don't know what they are now. Did they shift that, Harvey? What they changed it? Okay. I didn't catch that. They used to be. Actually, you know what? I might have read that the other day and then it just slipped my mind. Short-term memory, right? I'm just telling these guys I put on a a passcode on my iPad so my kid couldn't make a lot of purchases, and then I went and forgot what the passcode is. I think I'm gonna have to like reinstall my entire system on my iPad. Which one was it that was doing the reverse split? I think one of them was doing, oh, they stated it today. Okay, Bloomberg says they stated it today, that it's no longer the front months. And a lot of these are going to have to reverse split or change how they change the makeup of the ETFs. I've not really traded anything that is an oil ETF for a long time. I used to, maybe like 10 years ago, but it's been a while. NUGTB Just did a reverse split. NUGT. Let me look at that. Reverse splits are the death of a stock. Yeah, a lot of times. Other than CL, what tickers can be used for better leverage? Well, QM is the half contract. So when things started going a little bit crazy the last month or so, I started using that one. And I hadn't been doing that for a long time. But it's basically, it's the same as the CL, it's just a half contract. So you still have the monthly on it. It is QM. Q as in Quincy, M as in Mary. And that's the half contract, and it trades in quarters. So like every point on it is $50. Here, let me see here. Basically, it's $12.50 per tick is what you're looking at. Oops. There you go. So basically with Win, that little base that we were seeing in Win, this is kind of what we were looking at. Like, so a lot of these that are kind of doing this base, like Intel even, you can see how they can break higher, like NUGT. But it's going to come down to what happens in that last little portion right there. You're welcome, Richie. JNUG is the 3 times. Yeah, so a lot of the ETFs, they're 2 times, 3 times the underlying commodity. So that makes the volatility really crazy. Oh my gosh, look at that. $5. So you can see the split on there. Crazy. All of these are going to have to reverse split if they haven't already. I think pretty much they all figured that out though. What was, I remember this one a long time ago. Here was the SQQQ. That's another one that used to be really good for like hedging positions within the Nasdaq. And then it had gotten to a point where because the market was so strong, it just went down to like nothing. That was, let's see here. It's a while back. Look at that. So this, like it's showing like 450, 450, but back then it really wasn't. It was, it was way down here. And it's just still going down. So basically, if you go and look at what happened on SQQQ over the last 4, 5 years. 5 years? Well, maybe even 6. Last 6 years. That's what you got going on right now. I agree, Richard. The ETFs that leverage 2 to 3 times should be banned. They're not. It's just not good. Shareholders totally can get caught. Is that a check mark on win? I'll pull that back up again for you. Let me go with the daily. That was such a nice avalanche there on win. So what we could get is that little pop. But then again, that pop, I think that you would then watch for it to sell it. But we'll see. Depends on how fast it goes. Basically, if it comes out of a range like this and then you see it's just doing a lot of like overlap, that's going to be easier for that to fall. If it goes really strong, then you would have a potential it might manage to come back up into this zone. But right now, I'm not going to do much betting on this one. I think INTC base might have been actually better than win. Maybe not. No, they both have that like little middle point in there. So if you look at INTC here, see this little like kind of higher high in there? Win did the same thing, and that's not ideal. That little higher high. The best basis will just hold that and then go. We can get it as a tilted continuation, but the best ones will hold it. Do I use Ninja as a trading account? And if so, what's your opinion on them? I did open one as a trading account. Gosh, I don't even know how long ago, a year and a half ago, maybe. They're okay. I don't have, I mean, there's some complaints that I have, obviously, but not anything big. I like their chart trading. That's the main thing that I really like on it. I heard that Harvey said IB lost 88 million on crude oil last week in just a few trades. Yeah, all of the brokers have clamped down on oil trading. They were 15% of the open interest and a few traders blew out. I don't know. I use Philip for Ninjatrader, and Harvey uses Dorman. I don't know that there's really an advantage too much over one or the other. Dorman might be better if you're using an IRA, but I use Philip. Yeah, I've been pretty happy. Rates are competitive. Dorman gives the best Christmas gifts. Nice. I have not, Richard. Um, Mine with Ninja's not an IRA. Yeah, you guys are welcome. I hope I answered most of your questions here today. I know it's such a slow day in the market, and now you all have to go and post all of your teenage and college year pictures in Telegram for us to giggle at. I'm on it. Yes. That's gonna help with entertainment here as I'm getting my kid to work on his math worksheets. You're welcome, everyone. I don't know. So Richard says Ninja said you'd have to have a custodian to trade IRA. Anyone know that with Ninjatrader? Does anyone here trade their IRA with Ninjatrader? Only Dorman? Harvey says you win so far as biggest idiot photo. Who can top me? Oh, I bet I could, Harvey. I don't know that I'm going to, but I might be able to. Do it, do it, do it. We'll see what I can dig up. Nobody else is answering the question on the IRA. Sorry, guys. What is everyone here using for IRAs, for trading for their IRAs? I think TOS might be the biggest one, right? And IB, TOS and IB. Harvey. Las Vegas, blackjack. I'm pretty sure there's not a blackjack IRA. You can try to pull that one off over the IRS. See how that works for us. Richard says IB will not let you trade ETFs in an IRA. Jesse says I tried to set it up with Ninja, only dormant, lots of fees, so I went with TOS, no fees for IRAs. Yeah, I'm in the process of opening one with TOS, but got distracted. I have IB, but again, I don't really do ETF. I'm Richard, I had ETFs in my IRA and IB, but that was years ago. Did they change that? I stopped trading them years and years ago. Too many, it was a huge pain when like I remember like when they would pull something out of an ETF, I'd end up with like 2 shares or something. It would be like ridiculous. And then I'd have to try to get rid of those, and it was a mess. So I wouldn't be surprised if they stopped, but they did let you a long time ago. Richard says they sent an email stating they will not allow trading ETF due to the tax issues. When was that you got that? I mean, I think the last time I was in an ETF in IB was maybe 6 years ago, last week. Interesting. I should probably check my emails. I can't keep up with emails. I just can't. Tasty lets you trade ETFs, no commissions if you buy the shares in an IRA. You're trying to put on a trade in USO. Okay, but was it because it was USO or was it because it was an ETF? ETF. Interesting. How many of you guys are trading ETFs? I mean, it was a huge thing like 10, 15 years ago. Like the brokers were all promoting it, and I frankly just didn't really like a lot of them. I was trading them years ago, but I just haven't for a while. New tax laws. Aha. See, this is how I get updates on other markets that I don't focus on as much anymore. You guys, I'd be oblivious otherwise on some of this stuff. Richard says still trades ETFs with Schwab with no issues. Yeah, I mean, when you're dealing with more of like the day trader type of accounts is probably where you're going to run into it. I'm pretty sure my husband has them in other stuff, but they're all long term. It's kind of funny. I don't have any idea what my husband is doing with his investment stuff. He's like always, can you take a look at it? But then he never gives me the stuff to take a look at. So haha on him. It's like, why didn't you tell me to get out of this when the market crashed? I'm like, well, I told everybody else, but kind of funny, right? Yeah. Everyone but the guy I live with. Exactly. Sure, nobody else has a husband that doesn't listen to their wife. Sean, you listen to me, right? Sometimes. You do? Did you get your clothes put away? What? My son is sitting here. He's like, I listen to you. I listen to you all the time. Your clothes put away? I don't know what you're talking about. Okay, you guys. We're gonna go work on some math here while the market just kind of plays around. Be careful out there. I will see you back here next week. And harass me if you don't see the link for the YouTube replay. I will get that up here as soon as it is done transferring, whatever it's doing, thinking about it. Harvey's gonna go watch paint dry. Harvey, I have some painting you can do. Come on down before it gets to be 110. Actually, we might do some painting this afternoon. How's that sound, Sean? Painting. Yes? It's like, okay, whatever. All right. Take care, everyone. Bye. Exactly, Harvey. You're going to be the only one on the plane. I know. I got to start using Zoom. I'm on it. My admin is on it. He's been harassing me. Maybe that's what I'll do this afternoon. I'll go play with Zoom. We'll get flipped over there. Did Harvey help me move? No, he did not. I didn't send him the plane ticket, though. That was my fault. Don't worry about the porn on Zoom. Yeah, no problem. Oh my gosh. It is time to go. Bye. I'll see you next week.